Hi everyone, so this video is to explain to you chapter 1, which is business activity. All right, so what are the new words that we're going to learn for this chapter? We have here the new business terms, the needs. We will study about the needs, the wants, economic problem, scarcity, factors of production, opportunity cost, division of labor, and sorry about that, and added value. All right. So I will break down or I will divide this chapter into two videos so that it's not so long for you to watch. We will now start with the need and the want definition. So, what is a need? A need is a good or a service essential for living. So we need food, we need water, we need clothing, right? These are needs. And what are wants? A good or a service which people would like to have. So basically, water, we need water. Clothes, maybe we need a few. But the more desire we have to buy more and more clothes, they are no longer needs. They are already called wants. Okay, remember the key idea here? Essential for living. You need this to live. All right? And want is a good or service which people would like to have, something that you want to have. So between the two, it's really the need that is essential for living. Okay. Want, you want it, but of course, it is not essential for living. Okay. Next, we talk about economic problem. So, why is there a problem? Why is it that there is economic problem? So, these are the key points. First, results from being their unlimited ones. So, a lot of the people or a lot of people have unlimited ones, like you and me. You have already an iPhone 6. Now, iPhone 8 is, let's say, is out in the market. You want another iPhone 8, and then iPhone 9, iPhone 10. So it goes on like that. Your wants are unlimited because that is human nature. All right? That is one of the causes why there is economic problem. So we have unlimited wants. People keep wanting more and more, but there are limited resources to produce the goods or services to satisfy those wants. Let's say a car. Your car is still fine, but then you want a new one. So it becomes a problem because to create a new car, to produce a new car, you need resources. Okay, we will talk about the resources in a little bit. So, in short, this is where the problem comes. Unlimited wants, okay, underline that in your notes. Unlimited wants, but limited resources to produce the goods or services to satisfy those wants. And then what is economic problem? So this economic problem creates scarcity. Okay, another big word for you now as we continue with the video. Okay, so now let's go back a little bit. We talk about needs and wants, and because there's unlimited wants, there is economic problem, which creates scarcity. Right. Now, I want you to take time while watching this video. You can do this later. You read the case study on page 2. This is maybe one of the most popular questions of people about printing of money. Why is it that a country cannot solve economic problems just by printing money? Can't we just print a lot of money and give it to people? Okay, I want you to read this case study so that you're able to understand the reason why. Okay, the answer is in the bottom part here. You spend time reading that, and then we can talk about it more when we have our face-to-face or our live sessions. Now, what is scarcity? So, scarcity is defined as the lack of sufficient products to fulfill the total wants of the population. So, there is no sufficient products. You can underline this key idea here. Scarcity is the lack of sufficient products. Okay? But the real cause of scarcity is that there is not enough factors of production. So you are now having a lot of these new words with you. So we have needs, we have wants, we have scarcity. Now we have the factors of production. Again, we define scarcity as the lack of sufficient products to fulfill the total wants of the population. But the real cause of scarcity is not enough factors of production. All right. These are now your four factors of production. These are very important for us to produce the goods and services that the people need, okay, or to satisfy wants as well. So first we need land. Sorry. So land, what is land? Natural resources. Okay. We need gasoline for our cars. Where do we get that? From the natural resources. So we need this. Or let's say you like eating sweet foods, but you know that one of the ingredients of chocolates is actually, let's say, sugar. Where do we get sugar from? From sugarcane. And we need land, okay? We need these natural resources. So these natural resources are very important to produce goods and services. Labor. We need people to operate machines. We need farmers in order to get the crops from our land and make them or convert them into products that people want to buy. Okay, so we have land, we have the labor or the people or the employees that are there to make the products available. And then, of course, we need capital. To start a business, you need money. That's one of the main things as well. You need the money, you need the machine, you need the equipment in order for you to start your production. All right? And the last one is enterprise. I like this last one. It means somebody needs to start taking the risk, needs to have the skill in order to start the business. So these are the four factors of production. You have your land, natural resources, your labor, which is the people, your capital, which is your finance, your machinery, your factory, your equipment, okay? And your enterprise, the skill and the risk taking ability of the person or the owner of that business. So someone needs to take the risk, and that is now called the owner or the enterprise. So take note of the four factors: land, labor, capital, and enterprise. Okay, so what is really the cause of economic problem? We say there is too few factors of production. You might wonder why some products are very pricey or very expensive. Let's say diamond rings. No, like not everyone can buy a diamond ring because it's expensive. Why? Why is it difficult and why is it expensive to buy a diamond ring? Because these diamonds are from a natural resource and it's not that, in other words, there's a few natural resources for this type of mineral, okay, for this type of diamond. So too few factors of production, and perhaps not all people are skilled to really make these diamonds. All right, so it goes on and on. So there are too few factors of production. And this is the equation we have. It's like a math now. Unlimited wants plus limited resources is equal to scarcity. Okay, this is the definition of scarcity. Why is scarcity happening? People want more, 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 but the resources are limited. Okay, so the next thing that we will talk about is opportunity cost. And in your textbook, it is defined as the next best alternative given up by choosing another item. So this illustration from your book is a very good example of what opportunity cost is. So I'll take a look. I'll give you like a minute to take a look of this. This is an individual point of view, a business point of view, and a government point of view. Okay, let's say you're an individual and you only have 100,000 real. What is your plan? Do you want to have a holiday or do you want to buy a car? So in here, if you read this, if the individual, sorry, if the individual, okay, sorry about that, guys. Okay, here it is now. Okay, so if an individual chooses to buy the holiday, if you choose the holiday, then the other one that was not chosen is your opportunity cost, which is the car. So in other words, opportunity cost is the item you did not choose, the item that you give up, the item that you did not choose, you did not buy because you're buying another one. Okay? Now for business, you only have money for either machine A or B. So are you buying machine A or are you buying machine B? If you decide to buy machine A, then the other one or machine B becomes your opportunity cost. The same goes for the government. Let's say the money of the government is only 100 million real. What is the plan? A new road or a new school? What will the government prioritize? Is it better to build a new road or a new school? If the government chooses to build this road, then this school becomes opportunity cost. All the three items here below are the ones not chosen. So they are the opportunity cost. So I will repeat that. The item which you did not choose is called your opportunity cost. So opportunity cost again is defined as the next best alternative given up by choosing another item. Okay, I'm going to cut this video. The next video will be to explain specialization. Thank you.